Hello, what up, my people? Welcome back to my channel once again. So today I'm going to be dropping my trade recap on gold. So today being Monday, 23rd June 2025, I'm going to be dropping my trade recap from Monday till Friday. So I'm going to be starting with Monday. That's Monday, 23rd, Monday, June 23rd, 2025. So irrespective, my confluences for this particular trade are very simple. The market started from London session. I'm going to start from London session. This is the accumulation of the London session after the Asian session run around here. This is the accumulation of London session. So irrespective, we were waiting for probably a pullback into this OCL or maybe a pullback into this particular resistance and support zone. So irrespective, that didn't happen around London session. So I allowed the market to rally around for itself. So irrespective, I didn't enter any trade on London session. I allowed the market to just go rally around, and I was actually expecting this as my liquidity. This is my liquidity. So irrespective, when I saw this liquidity, I knew that the New York session is probably going to tap me into this market. So irrespective, what did I do? I have confluences for my trade. My first confluence is my clear break of structure. This is the break of structure with a body candle closure. Break of structure. My second confluence is liquidity. Do we have liquidity? Yes, we have liquidity. My third confluence is an OCL. That's a fresh OCL. Can you see? We have a fresh OCL here lying on our V shape. That's immediate buy and an immediate sell with big candle closures. Irrespective, this is the first one and this is the second V shape. So now, why do I normally use V shape? V shape are my resistance. Most of the time, I use V shape as my resistance zone or my support zone. So irrespective, this particular entry is a support zone. So I marked my first V shape and my second V shape, and irrespective, the market came in, tapped me into, and gave me probably a 6, let's say a 7:1 RR. But that's not the main case here. That's not the main case. You can't just use V shape just like that. You have to make sure you join both price and time. Price and time. I don't just use V shape just like that, because if you look at a lot of V shapes are here, but irrespective, time and price. And irrespective, I waited for time for New York session, and look at the time that this market happened. The New York open at around 1:30 p.m. The market tapped us into this particular support zone and it started rallying up. So irrespective, we rallied this trade from this zone, from this particular zone here, from this zone to this zone, and we cut out of this market at this particular psychological level. Can you see? This is my take profit level, psychological level. And irrespective, after I cut this particular first trade, what did I do again? So irrespective, what I will be marking here for my second trade. For my second trade is the high here and the low here. And irrespective, when I marked the high and the low, it gave me this particular fib level. And when it gave me this fib level, I knew it was just only going to respect the 0.618 level. And irrespective, my entry was on this particular top of the 0.618 level. And irrespective, boom, the market tapped me in and started reversing immediately. This particular trade gave us a 5:1 RR. So the first trade was caught with time and price, and the second trade was caught with the fib level. And we rallied that trade from this zone to this particular zone. So irrespective, we caught a 5:1 RR. It is a 4:2 RR, 4:1 RR, but based on the tight, if I look at my trade very well, I'm supposed to have a tight stop loss. So irrespective, it is a 5:1 RR. After that, I didn't take any trade again for Monday, and we waited for Tuesday. Now Tuesday is here. What I was looking at for Tuesday was also time and price. But irrespective, the market gave us some reaction and took us out. So this particular trade was a Tuesday trade, and I was trying to catch this trade at the Asian session. Can you see 2:45 a.m.? I was trying to catch this trade at the Asian session, and irrespective, the market came, tap us in, gave us a little drawdown, came back and give us over a 1:1 RR, took a break even took break even from this particular level here. After it broke this particular level, I took break even. I took about 60% of the trade, and irrespective, the market came back and took us out at break even. So that is how we also lost this particular trade at Asian session. So irrespective, I didn't trade again. I waited for New York session. So irrespective, I waited for all of this. It played out, and I waited for New York session. Now for New York session, how did we enter this trade on the 5 minutes time frame? We have a clear order block, and I always say this: time and price. I don't just enter any order block. I don't just enter. But this particular order block was created at around 105. Can you see? That's New York session created this particular order block with this run. So irrespective, after I created this, I was actually on seat, and irrespective, the market came, tap us into this particular state, and just give us immediate 3:1 RR. Give us immediate 3:1 RR, and that is how we smashed this particular trade on New York session on Tuesday. Can you see? 1:20 p.m. So time and price irrespective. After that, we have a clear break of structure here. Can you see? We have a clear break of structure. After we get this break of structure, what are we expecting? We are expecting a little pullback and continue going bearish. But irrespective, on the higher time frame, we have obstacles that made this market reverse from this particular zone. So irrespective, I entered this trade based on psychological level, and the market did not hold at all. Based on the timing. If you look at the timing that I entered this trade, it was New York break already. So the volatility in the market has reduced, and irrespective, we've seen a turnover in the market. So irrespective, that is how I traded on Tuesday, and I caught 3 trades. Got 1 break even, 1 win, and 1 loss for Tuesday. That is how we took 3 trades for Tuesday. Going to Wednesday 10:55 a.m. I got into the market very late, but irrespective, I actually also combined time and price here, but irrespective, I was very late based on the timing, and gold was very funny that very day. So after I actually marked this particular break of structure, what I was looking at was this particular order block. But while I was looking at the order block, I took this trade based on this particular break and retest. Okay, since it breaks this particular structure, what I was waiting for was the retest of this particular zone here. The retest of this particular zone. This is why I caught into the market. Can you see? The retest of this particular zone, but I now dragged my SL to cover the order block. Can you see? And irrespective, when the market came, where did it respect? It respected the order block. Can you see? It respected the order block and immediately started going down. I entered this trade at around 11 a.m. That's London session, and we went out of this trade at around New York session. We left this trade at New York session. That means the whole time they'll be using this order block to retest before the market started going down. So irrespective, that is how we also cut this particular trade on a 3:1 RR. And irrespective, the market gave us a sweet profit. So on the process, I saw an engineered liquidity. What I was also looking at from here was that I have a clear proportional order block here, and I also have a nice OCL. Proportional order blocks means a buy that created these large cells. This particular buy was what created these large cells here. And irrespective, this is also an engineered liquidity. So what I was looking at is, since my engineered liquidity was close to my psychological level, what I was looking at was taking out this liquidity, taking out this particular proportional order block, and this nice OCL. I expected the market to bounce back to this particular level before we see a change in the movement. But irrespective, did not respect that for me, and it took us out at 3:05. We entered the trade at 3:05. That's New York session, and it took us out at 3:50. So irrespective, we actually lost the second trade for Wednesday. And after that, we didn't take any trade again till Thursday. Thursday was a nice trade, but we're going to go to the 1 hour time frame to see what happened on Thursday. So let's go to the 1 hour time frame. Thursday was a nice trade. Thursday trade was very, very nice, and I will be explaining how we caught that trade on Thursday. It was a 1 hour time frame trade, and irrespective, that trade went very, very well. So this is the trade. We caught this trade at London session. So on the 1 hour time frame, we have our resistance level. If you look at this particular level, we have a fresh OCL. Can you see? This OCL is very, very fresh, and we also have a resistance candle here. Can you see a V shape? Immediate buys and immediate sells. Immediate buys, and this is our order block also. But I knew that the market was only going to respect our fair value gap. That's our imbalance. And when the market came, it tapped into this OCL at around 9 a.m. That's London session. Time and price. And irrespective, the market came, tap us into this particular level and give us immediate 8:1 RR. It's still 7:1 RR, but due to my tight stop loss, it is 8:1 RR. And irrespective, this market actually respected our analysis, and irrespective, we rallied this trade from that particular zone to this zone. So that is how we actually caught this particular trade on London session in gold. That's on Thursday. So let's go back to our 5 minutes time frame to finish our analysis. So after that we had, let's go to Friday. After that, we also have a breakout structure here. We have a breakout structure. And anybody that normally follows my trade recap will know that my breakout structure line also says a lot about my trade. Any place I see a breakout structure line, I always try to see possibilities around that breakout structure. Now, what happened here? After we rallied this trade to New York session opens, and it's actually opened that the market was on our psychological level. Now, why did I enter that trade in particular? Let me explain. This particular breakout structure line, this is my breakout structure line, and irrespective, we have liquidity around that breakout structure line. These two candles did not tap into that breakout structure line. So what I was looking at was, these were all my liquidity. These two are all liquidity. They are all liquidity, and irrespective, since they didn't tap into it, what I was looking for was a quick tap. And what I did was to keep my sell limit here, and irrespective, the market came. After I swept this liquidity, it actually tapped me in and started coming down immediately. I was expecting to get out of the trade around this zone, but the moment I saw this breakout structure, I was expecting on the 1 hour time frame we have an obstruction. We have an obstruction on the 1 hour time frame, and this is our obstruction. So what I was targeting was before the OCL on the 1 hour time frame. That was when I got out of the market, and irrespective, the market gave me a 4:1 RR. And irrespective, I rallied that trade from this zone to this particular zone. So that is how we traded for Thursday, and we got two trades. And on Friday, we didn't take any trade. But irrespective, the market actually gave us several opportunities on Friday. But irrespective, Friday was not so enticing to me, and I did trade on Friday. So I decided to preserve my capital. So that is it for this particular week. And thanks for watching my trade recap, and I'm gonna see you on the next one. Peace out.